Welcome to WealthNest, your home for traders, thinkers, and financial freedom builders. Whether you're just starting out or sharpening your edge, you're in the right place. Be sure to subscribe, like, and turn on notifications so you never miss a powerful insight. Just a quick heads up, all content here is for educational purposes only. Nothing shared is financial advice. Always do your own research and manage your risk wisely. Meet John Toles, a name that resonates with precision and focus in the world of foreign exchange trading. Many traders know him by his alias, the EURUSD Sniper. This title is not just a catchy nickname, it perfectly describes his trading philosophy. Like a sniper, John waits patiently for the perfect opportunity to arise. He does not take random shots in the market. Instead, he focuses all his energy and expertise on one single target. This target is the EURUSD currency pair, which represents the exchange rate between the euro and the US dollar. By concentrating on this one pair, John has developed an incredibly deep understanding of its unique behaviors and patterns. John Toles is the founder and lead mentor of the Toles Traders, a community hosted at WealthNest. This group is more than just a trading team, it is a collective of individuals dedicated to mastering the markets under John's guidance. His decision to specialize in EURUSD is a cornerstone of his success. The foreign exchange market is vast and filled with countless currency pairs, each with its own rhythm. For a new trader, this can be overwhelming. John simplifies this complex world by teaching his students to become experts in one thing first. He believes that true mastery comes from depth of knowledge, not breadth of it. John's journey was not an overnight success. It was built on years of study, practice, and the development of a rock-solid trading plan. He realized early on that trying to trade everything at once was a recipe for disaster. This led him to choose the EURUSD pair for several important reasons. It is the most traded currency pair in the world, which means it has high liquidity. High liquidity often leads to smoother price movements and tighter spreads, making it an ideal canvas for technical analysis. This focused approach allows John and his team to filter out the market noise and see the opportunities with crystal clarity, just like a sniper looking through a high-powered scope. For aspiring traders, John Toles represents a path to clarity and consistency. His story is a powerful reminder that you do not need to conquer the entire market to be profitable. By becoming a specialist, you can gain a significant edge. The EURUSD Sniper's method is about precision, patience, and a profound understanding of a single financial instrument. He teaches that success in trading is not about being busy, it is about being effective. This principle is the foundation upon which the Toles Traders community is built, offering a clear and structured path for anyone willing to learn the art of specialized trading. At the heart of John Toles' philosophy is a powerful and inspiring mission. His ultimate goal is not just about making money from the markets, it is about achieving a greater sense of freedom in life. This mission is encapsulated in his simple yet profound motto, one pair, one setup, for life. This statement is the guiding light for every member of the Toles Traders. It speaks to a commitment to simplicity and mastery in a field that can often feel chaotic and overly complicated. The motto serves as a constant reminder to stay focused, trust the process, and avoid the distractions that lead many traders astray on their journey. The concept of one pair emphasizes the power of specialization that John so strongly advocates. He teaches that by dedicating all your analytical energy to the EURUSD, you can learn its personality inside and out. You begin to understand how it reacts to news, how it behaves at different times of the day, and what its typical patterns look like. One setup refers to his specific, repeatable trading model. Instead of chasing dozens of different strategies, John has refined a single, high-probability entry system. This removes guesswork and emotional decision-making, replacing it with a clear, mechanical process that can be followed consistently day after day. The final part of the motto, for life, points to the long-term vision of this trading style. This is not a get-rich-quick scheme. It is a professional skill set that, once mastered, can provide a reliable source of income for years to come. The mission is to empower traders with a sustainable method that can adapt to changing market conditions while remaining fundamentally simple. The freedom John speaks of is financial freedom, but it is also freedom of time. A simple, effective system means you do not have to be glued to your charts all day. You can trade for a few hours and then enjoy the rest of your day, living life on your own terms. This mission creates a strong sense of purpose within the Toles Traders community. Members are not just learning to trade, They are working towards a shared vision of a more independent and fulfilling life. John's guidance is practical and grounded, focused on building real, lasting skills. He encourages his students to see trading as a business, not a hobby or a casino. The motto, "One pair, one setup for life," is more than just a catchphrase. It is a complete business plan and a philosophy for achieving success and freedom through the art of disciplined trading. John Toles' trading style is a masterful blend of two powerful analytical approaches: smart money concepts and classic price action. This combination gives him a unique edge in reading the market. Smart money concepts are based on the idea of trading alongside the big financial institutions like banks and hedge funds. These large players, often called smart money, move the market with their massive orders. John teaches his students how to identify the digital footprints left behind by these institutions. By understanding where the smart money is likely buying and selling, traders can position themselves to ride the waves created by these powerful market movers. Price action, the second pillar of his strategy, is the art of reading the story that the charts are telling. It involves analyzing the movement of an asset's price over time without relying on lagging indicators. John focuses on the raw data of the candlesticks themselves, their shapes, sizes, and formations. He believes that the price itself contains all the information you need to make a trading decision. By combining this with smart money concepts, he creates a comprehensive view. Smart money concepts help identify high probability zones, and price action provides the final confirmation to enter a trade with confidence and precision. The core of the smart money concept side of his strategy involves identifying key areas on the chart. These include concepts like order blocks, which are specific candles where large institutions place their orders. He also looks for liquidity grabs, where price moves to an area to trigger the stop losses of retail traders before reversing in the intended direction. Understanding these concepts helps a trader avoid common traps and align their trades with the market's true momentum. It is like having an insider's view of the market structure, allowing you to anticipate moves rather than just reacting to them after they have already happened. This dual approach makes the strategy robust and reliable. Smart money concepts provide the why behind a potential market move, giving context to the overall directional bias. Price action then provides the when, signaling the exact moment to enter the trade. This synergy is what makes the EURUSD sniper's method so effective. It is not about using complex indicators or algorithms. It is about learning to read the language of the market through the lens of institutional behavior and pure price movement. This clear, logical framework is easy for new traders to grasp and apply systematically. A key element of John Toles' systematic approach is his use of multiple time frames. He does not just look at one chart, he analyzes the EURUSD pair through 3 different lenses to get a complete picture. This process is called top-down analysis, and it is crucial for making high-probability trading decisions. The 3 time frames he uses are the 4-hour, the 15-minute, and the 3-minute. Each time frame serves a distinct and vital purpose in his trading plan, working together to align the trade with the market's larger flow. This structured approach helps to filter out bad trades and increases the odds of success. The first and highest time frame is the 4-hour chart. John uses this chart to establish the overall market direction, or bias. This is the strategic view, like a general looking at a map of the entire battlefield. On the 4-hour chart, he identifies the major trend, key areas of support and resistance, and significant zones where smart money is likely to be active. The goal here is not to find a trade entry, but to answer one simple question: are we in a bullish or bearish market environment? This high-level perspective ensures that any trades taken on lower time frames are in harmony with the dominant market trend. Once the directional bias is determined on the 4-hour chart, John drills down to the 15-minute chart. This time frame is used to refine the analysis and identify specific areas of interest for a potential trade. On the 15-minute chart, he looks for more detailed market structures and zones that align with the 4-hour bias. For example, if the 4-hour trend is bullish, he will look for bullish order blocks or areas of discount on the 15-minute chart. This is the tactical level of analysis, where he narrows down the potential entry zones. The 15-minute chart acts as a bridge between the long-term trend and the short-term entry signal. Finally, John moves to the 3-minute chart for trade execution. This is the sniper's scope, where he waits for the precise moment to pull the trigger. On this low time frame, he looks for a specific confirmation pattern that signals the market is ready to move in the direction of his bias. Waiting for this final confirmation on the 3-minute chart helps to improve the timing of the entry and reduce risk. By systematically moving from the 4-hour to the 15-minute and then to the 3-minute, John ensures that every trade he takes is well aligned, from the big picture down to the smallest detail. This disciplined multi-time frame analysis is a hallmark of his sniper style. John Toles' entry model is a clear step-by-step process designed for precision and repeatability. It's really the core of his one setup philosophy. So, the process begins after the top-down analysis has been completed and a high probability zone on the 15-minute time frame has been identified. The first step in the entry sequence is to wait for the price to enter this predefined zone of interest. This zone is typically a fair value gap, or FVG, or sometimes an order block. Now, an FVG is basically an inefficiency in the market. It's a gap between 3 candles that price is likely to revisit. Patience is honestly critical here. A sniper does not chase the target. He waits for it to come to him. Once the price has entered the 15-minute zone of interest, John moves his focus to the 3-minute chart. Here he waits for the second step, a clear signal of a market structure shift. This signal is often called a change of character, or ChoCH, or sometimes a market structure shift, MSS. In a bullish setup, this would be the moment when the 3-minute chart stops making lower lows and breaks a recent high, showing that buyers are starting to take control. This shift confirms that the higher time frame zone is being respected and that momentum is beginning to build in the desired direction. This step, prevents entering a trade too early, before the reversal has been confirmed. The third step is the final confirmation and the trade entry itself. After the ChoCH or MSS has occurred on the 3-minute chart, John looks for a new small fair value gap to form in the direction of the intended trade. This new FVG on the 3-minute chart becomes his precise entry point. He'll place a limit order to enter the trade as soon as the price retraces back into this small gap. The candlestick patterns at this point are also important. He looks for strong, decisive candles that support his trade idea. For example, a bullish engulfing candle near the entry point would add another layer of confidence to the setup. This 3-step process, price entering the 15-minute zone, a structure shift on the 3-minute, and entry on a 3-minute FVG, creates a highly filtered and specific trade setup. Each step must be completed in order. If any step is missing, the trade is invalid and he simply waits for the next opportunity. This mechanical approach removes emotion and discretion from the execution process. It turns trading into a matter of following a checklist. For members of the Toles Traders, learning this clear entry model provides a tangible and systematic way to engage with the market, building both skill and confidence with every trade. For John Toles and the Toles Traders, risk management is not just a part of the strategy, it is the most important part. John firmly believes that a trader's first job is not to make money, but to protect the capital they already have. Without capital, you cannot trade. This defense-first mindset is the foundation of long-term success and consistency. The first rule of his risk management plan is to risk only a very small and fixed percentage of the trading account on any single trade. He advocates for risking no more than 0.5% to 1% of the account balance per trade. This rule is non-negotiable. This strict risk per trade rule ensures that no single loss can significantly damage the account. Even a string of several losses in a row would only result in a minor drawdown which can be easily recovered. This approach removes the fear of losing, which is a major source of stress and poor decision-making for many traders. By knowing that the maximum potential loss on any trade is small and manageable, a trader can execute their plan with a clear and objective mind. This psychological benefit is just as important as the mathematical one. It allows the trader to focus on executing the strategy perfectly, rather than worrying about the outcome of one trade. Alongside limiting risk, John emphasizes the importance of a positive risk-to-reward ratio. For every trade he takes, the potential profit must be at least 3 times greater than the potential loss. This is known as a 1-to-3 risk-to-reward ratio. For example, if he is risking $100 on a trade, 1% of a $10,000 account, his target for profit would be at least $300. This principle is a game changer because it means you do not have to be right all the time to be profitable. With a 1-to-3 ratio, you could be wrong on 2 trades and right on 1, and you would still be at break-even or slightly profitable. This favorable ratio is combined with a realistic win rate goal. John's strategy is designed to achieve a win rate of around 50 to 60%. When you combine a 50% win rate with a 1-to-3 risk-to-reward ratio, the mathematics of profitability become very powerful. Over a series of trades, the wins will significantly outweigh the losses, leading to steady account growth. This focus on risk management, defined by a small risk per trade and a high reward ratio, is the secret weapon of the EURUSD sniper. It is what allows him and his students to trade with confidence and build their accounts sustainably over time. John Toles teaches a structured and disciplined approach, not only to entering trades but also to managing account growth. His plan is not about doubling an account overnight, it is about achieving steady, consistent growth that compounds over time. He sets realistic and achievable monthly targets for his students. The primary goal is to aim for a consistent 5 to 10% growth in the trading account each month. This target is ambitious enough to be meaningful, but realistic enough to be achieved without taking excessive risks. This focus on steady gains builds a professional mindset and avoids the boom and bust cycle that plagues many amateur traders. A key part of his wealth-building strategy involves a clear plan for withdrawing profits. John believes that the purpose of trading is to improve your life, and that means regularly taking money out of the trading account. He has a simple rule. At the end of every profitable month, withdraw 50% of the profits. For example, if a trader with a $10,000 account makes a 10% profit, which is $1,000, they would withdraw $500. The remaining $500 stays in the account. This approach achieves two important things. First, it allows the trader to enjoy the fruits of their labor, making the success feel real and tangible. Second, the 50% that remains in the account contributes to its compounding growth. The next month, the trader will be calculating their risk and potential profits based on a slightly larger account size, $10,500 in the previous example. This is the power of compounding. Over time, even small, consistent gains can lead to substantial wealth accumulation. This systematic withdrawal and compounding plan strikes a perfect balance between enjoying profits now and building long-term wealth for the future. It turns trading from a purely digital activity into a real-world cash flow business, which is a powerful psychological motivator for staying disciplined. This entire process is designed to foster a healthy relationship with money and trading. It prevents the common pitfall of traders never actually realizing their profits. By setting clear growth targets and having a non-negotiable withdrawal rule, traders can see their efforts translate into real-world benefits. This reinforces positive behavior and strengthens discipline. The Toles traders are taught to view their trading account as a business asset that needs to be managed wisely. The goal is not just to grow the number on the screen, but to build a sustainable source of income that supports a life of freedom and choice. Success in trading, according to John Toles, is built on a foundation of routine and structure. He emphasizes that a professional trader does not just show up to the charts and hope for the best. Instead, they follow a consistent daily routine that prepares them mentally and analytically for the trading session. John's own routine is centered around the London and New York trading sessions, which are the most active times for the EURUSD pair. His day begins well before he even considers placing a trade. The first hour is dedicated to preparation, which includes reviewing the previous day's price action and marking up the charts. The pre-market routine is crucial. John starts by analyzing the 4-hour chart to establish his directional bias for the day. He identifies the key high and low points from the previous day and the Asian session, as these areas often act as magnets for price. He then marks his 15-minute zones of interest where he will be looking for potential setups. This preparation phase is deliberate and unhurried. By the time the London session opens, he has a clear game plan. He knows exactly what he is looking for and where he's looking for it. This eliminates impulsive decision-making once the market starts moving quickly. Throughout the trading session, which typically lasts for a few hours, John practices extreme patience. He is not looking to be in a trade all the time, he is waiting for his high-probability A+ setup to appear. If the market does not present a clear opportunity that meets all his criteria, he simply does not trade. He understands that sometimes the most profitable action is to do nothing at all. After his trading session is over, whether he took a trade or not, he moves on to the final part of his routine journaling. He takes screenshots of his charts, records his thoughts, and analyzes his performance. This journaling practice is vital for continuous improvement. If he took a trade, he reviews the entry, management, and exit. He asks what he did well and what could be improved. If he did not take a trade, he journals why, documenting the market conditions. This process of self-review helps to reinforce good habits and identify any bad ones that might be creeping in. It creates a feedback loop that accelerates the learning process. John Toles' daily routine is a testament to his belief that trading is a professional endeavor that requires discipline, preparation, and constant refinement. John Toles operates under a strict set of personal rules that govern his trading behavior. He teaches his students at the Toles Traders that discipline is the single most important trait a trader can possess. A great strategy is useless without the discipline to follow it consistently. These rules are not guidelines. They are absolute laws that must be obeyed without exception. The first and most important rule is to always follow the trading plan. This means never entering a trade unless it meets every single criterion of his entry model, from the 4-hour bias down to the 3-minute confirmation. No shortcuts, no exceptions. Another critical rule is to always respect the predefined risk. Before entering any trade, the stop loss is set, and the risk of 0.5% to 1% is calculated. John has a hard rule against widening a stop loss once a trade is active. Moving a stop loss is a sign of hope, not strategy, and it breaks the core principle of protecting capital. Similarly, he enforces a daily loss limit. If he loses a certain number of trades in a row, let's say 2 trades, or a specific percentage of his account in one day, he shuts down his platform and walks away. This rule prevents revenge trading, an emotional and destructive behavior where a trader tries to win back losses quickly. John also has strict rules about when he trades. He only focuses on the highest volatility sessions for EURUSD, which are the London and New York overlaps. He avoids trading during major news events like non-farm payrolls, where volatility can be erratic and unpredictable. He also has a rule against trading when he is not in the right state of mind. If he is tired, stressed, or emotionally compromised, he knows his decision-making will be impaired. He recognizes that his mental capital is just as important as his financial capital, and he protects it fiercely by stepping away from the markets when necessary. These rules create a fortress of discipline around his trading account. They are designed to protect him from his worst enemy, himself. The market can be random, but a trader's actions should not be. By adhering to a rigid set of rules, John removes emotion, ego, and impulsiveness from his trading. He teaches that freedom in trading comes not from doing whatever you want, but from the discipline of doing what you are supposed to do, over and over again. Joining the Toles Traders means adopting this mindset and committing to these principles, which is the true path to becoming a consistently profitable sniper in the markets. Thanks for watching today's video on WealthNest. I truly hope you found value in it. So what was your biggest takeaway? Let me know in the comments. If this helped you, just smash that like button, subscribe, and tap the notification bell so you never miss the next trading insight, tool, or tip. We're building a focused trading community, one smart decision at a time. WealthNest, build, trade, grow.